Welcome back. You're watching us here on Chartbusters. As promised, let's get chatting with the management of Gateway Distriparks as well. The company is on our radar as in the fourth quarter it saw muted results on account of the Red Sea crisis, but the management is hopeful of growth coming ahead and coming in from India itself as the company is expanding their network and sustaining growth. Mr. Prem Kishan Gupta, who is the managing director, joins in as always. Thanks a lot. Always a pleasure speaking with you, Mr. Prem Kishan Gupta. Let's start with the outlook for FY25 because FY24, you had an earlier projection of 10 to 15%. Understandable that you could not meet the volume guidance because of a lot of the external factors which were there as well. So if you could give us a sense of what is the volume target that you're gunning for in FY25 across both your rail and CFS verticals.
Good morning, Mangalam. You rightly said that the results are muted, and it is mainly because of Q4 where the rail volumes went down and the CFS volumes were stable. So as a result of that, our revenue and EBITDA both have come down. But rail, if you look on a year-to-year basis, then the rail business has gone up by 6%. And CFS has remained flat, but CFS has contributed negatively in the revenue and the profitability. I have always maintained that CFS business is not that we are focusing on, or it is not something that will continue to give us profits. It is the rail business. And in Q1 of this year, we started slow, but there is a upside tick coming in now. And we are hopeful that the supply chain disruptions globally will now settle down with now people estimate the delays that come in, the delays that due to transit time, so they can expect their cargo, they will have more visibility than, than it was earlier. So our guidance for the FY25 is at least 10% and we'll try for more. This is without any addition to the new terminals.
So what is the guidance that you have for this year in terms of volume, sir? And if you could also at the same time give us a sense of what kind of EBITDA per unit are you looking at for both your verticals? Volumes and EBITDA per unit.
So volumes, CFS will remain flat, but rail business will be 10% more. And the EBITDA that we earn at CFS is on a annual basis, it is coming out to 1,500 rupees per TU, but there was some one-offs in the Q4. So that is why in absolute terms, Gateway CFS business has contributed negatively. Rail, we are minimum that we think is in 10%, but we might go up to 12 to 15%.
Okay, all right. Hi, Mr. Gupta, but you missed out the EBITDA per unit. What is it likely to be for your ICD business?
See, for our ICD business, our annual average was 9,500 rupees per TU. And in the last quarter, we even went up to 9,900, which is Q4 24.
Correct.
So we maintain our guidance for the EBITDA to be in the range of 9,500 to 10,000. This quarter, the double stackability was less. And because of that, double stacking went down from 40% to 35% because of low volumes. And because of that, there was a revenue, went down by 2.5 crores.
Okay, all right. Just to reconfirm, Mr. Gupta, you are gunning for a 10% volume growth with the EBITDA per ton at 9,500 to around 10,000 rupees. We got that. And this 10% volume growth doesn't include the Jaipur ICD, right? That will be incremental.
No, it does not include Jaipur ICD, which will be there in FY26.
Doesn't. Got it. Okay, so you're not counting anything of that. Basic question, Mr. Gupta. On a valuation basis, you have comfort, but the numbers are not really coming. So a basic question, give and take everything. And EBITDA per quarter, can you do around 100 crores, which annualizes at around 400 crores? Is that possible?
We were doing almost the same, except for Q4. And in Q4, there
Yes.
were, like I said, in the CFS business, we took one-off expenses of 6.7 crores. And on the rail side, the double stacking was less. So because of that, the revenue was less by 2.3 crores. So roughly about uh, 9 crores, 9 to 10 crores have gone as one-off expenses in the last quarter, which will not be there going forward. So we are quite hopeful of retaining these EBITDAs, and with this increased volumes, we our aim is to go over even 100 crores per quarter.
All right, that is something that the street would then like if you, manage to consistently go over 100 crores per quarter in terms of EBITDA. Apart from the business that you are in, what's stood out in the last 12 months is you having dramatically increased your stake in Snowman Logistics. 4.99% is what you were allowed as a promoter without an open offer, and 4.99% is what you've done. Now that we are in the new financial year, I wanted you to tell me whether, you are comfortable with current levels or you want to go all the way up to 51%.
We would like to, we would ideally like to be over 50%, and we are working towards that because our net debt has come down. One thing from 337 crores to 277 crores. Company is generating cash, and Snowman has started doing very well. Like you must have seen those results.
Yes.
And we expect the growth to continue over there. So we would like to increase our stake in that company. There is no doubt about that.
All right. And finally, with the capex plans that you have, you also last time said that over 500 acres of land is what you have, and you were considering ways and means to, monetize that. What's the update on that before we let you go?
See, we have monetized 20 crores of the land and warehouse in Krishnapatnam, though it goes to the associate company Snowman, but because of the demand over there for the seafood, they have got a ready facility with the warehouse, so it will not take much time to convert that into the cold chain. So 20 crores has come in, and we continue to look at selling the rest of the land and infrastructure in Krishnapatnam, because the CFS there has no business because the port has stopped the container handling at Krishnapatnam.
All right. Thanks a lot for joining in. We will keep speaking with you. Hopefully, the next time we speak, the EBITDA would be over 100 crores per quarter, as you've spoken about, and maybe things would look a lot better on the double stacking and the volume front, domestic and internationally as well. Always a pleasure speaking with you. With that, we'll take a short break. On the other side, we get more on the stock-specific action and the markets on the whole.